So what will be the correct answer, all of you? See here. Option A. It is the portion of the uncalled capital to be called only in the event of winding up of the company. So read the question carefully in exams. Do they ask you reserve capital or they ask you capital reserve? If they ask you capital reserve, then you'll see the profit earned on forfeiture is transferred to capital reserve in share capital chapter. Next. Question B, same question number B option, other option. On 1st April 2023, Sara Limited issued 7,009% debentures of rupees 100 each. Face value is 100 at a premium of 10%. The total amount of, what is asked in the question, the total amount of interest on debentures for the year ending 31st March 2024 will be how much? Now, since the debentures are issued on 1st April to March, we will have to calculate interest for full 1 year. So see the date of issue also. This was a very simple question. If they give you 1st August, 1st July, then accordingly we'll count the interest for that period only. Here we'll count it for full year. 7,000 debentures are issued. 100 is the face value. Rate of interest is 10%. So how will we calculate the amount? 7,000 into 100 rupees face value into 9% is the rate of interest. All of you can see this. Okay. So 9 by 100. That will be equal to 2 zeros cancel. 7,000 into 9, 63,000. Okay. Means option B is the correct answer. 63,000 will be the interest to be paid for the whole year. That will be the year ended 31st March 2024. Then next question, 107A. I hope all of you are writing and solving along with me. Keep doing that, okay? Without writing, without solving in exams, you won't be able to do it. Now, Ali and Bani were partners in a firm. They admitted Chaman as a new partner for 1/4 share in the profits of the firm. Chaman brought rupees 5 lakhs as his share of capital. What is the new partner Chaman's capital? He has brought 5 lakhs. The value of assets of the firm on Chaman's admission was rupees. Now, assets are rupees 20 lakhs and outside liabilities are 12 lakhs. The goodwill of the firm on Chaman's admission was. Now, goodwill of the firm is asked on Chaman's admission. If you all remember, this is a question of hidden goodwill in admission of partner. Okay, hidden goodwill in admission of partner. How to do it? Do you all remember the formula how to find the hidden goodwill in admission of partner? Let's understand it. First, we find the net worth on the basis of new partner's capital. First, we find the net worth on the basis of new partner, that is Chaman's capital. Now, how to find the net worth on the basis of Chaman's capital? Chaman's capital is how much? 5 lakhs. And Chaman's share is how much? 1/4. We would do multiplication with the reciprocal. If Chaman's capital is 5 lakhs for 1/4 share, then what will be the entire firm's capital on the basis of that? That will be equal to 5 lakhs into reciprocal of his shares 1/4 becomes 4/1. So what would be the entire net worth of the new firm on the basis of Chaman's capital? 20 lakhs. 5 lakhs into 4/1, it would be equal to 20 lakhs. From that, we have to subtract the net worth of the new firm. New firm means after Chaman's admission. How would you find the net worth of the new firm? Either you can subtract net worth of the new firm, or else you can subtract net worth means assets minus liabilities. You can subtract the capital of old partners plus new partner also. Now here we see assets are 20 lakhs, liabilities are 12 lakhs. So what will be the net worth of the new firm including new partners capital? Since assets are 20 lakhs minus liabilities are 12 lakhs, it will be equal to 8 lakhs. But this 8 lakhs will be the capital of only Ali and Bani, because this was the capital on Chaman's admission. That means this 8 lakhs assets minus liability is the net worth of the new firm, but it includes the capital of only Ali and Bani. Further, if I add this 5 lakhs, which is the capital of Chaman, then in the new firm now, including Chaman's capital, what is the net worth? 8 lakhs plus 5 lakhs, 13 lakhs. Now, what should be the capital of the new firm on the basis of Chaman's capital? 5 lakh into 4 by 1, 20 lakhs. But what is the capital of the new firm? 8 lakhs of Ali and Bani, 5 lakhs of Chaman, 13 lakhs. Means remaining 7 lakhs is because of goodwill. This is the concept of hidden goodwill. Okay, in admission of partner, this is the concept of hidden goodwill. So what is the hidden goodwill's amount over here? 7 lakhs. Means your correct option will be option B, 7 lakhs. Okay. All of you can note it down and understand this properly. Practice this kind of question properly. It is quite popular in board exams to be asked. Hidden goodwill is quite popular in board exams to be asked. Okay. Going to the next question. B. As I said, 2 questions were asked in option. So B. 107 A and B. Okay. Look at the next one. Mohit and Rohit were partners in a firm sharing profits and losses in the ratio of 3:2. So this 3:2 is the old ratio. On 1st April 2024, they admitted Radha, new partner, for 1/4 share in the profits of the firm. But before Radha's admission, the balance sheet of Mohit and Rohit showed furniture of rupees 6,30,000. On admission of Radha, it was found that the furniture is undervalued by 10%. Undervalued by 10% means this 6,30,000 is already less by 10%. Its actual value is more. In the books, we have already recorded it at 10% less. And after that 10% less, the value has come to 6,30,000. On admission of Radha, it was found that the furniture is undervalued by 10%. I hope everyone is clear with that. Actual value is more. Furniture in the balance sheet is already less. The journal entry for the above adjustment on Radha's admission will be, first of all, we have to find out what is the actual value of the furniture. Now 6,30,000. So difference amount. Is it a profit or a loss? How would you do that? You suppose that the actual value of furniture is 100. You suppose that the actual value of furniture is 100. It is undervalued by 10%. Means its book value will be equal to 90. Okay. Its book value will be equal to 90. Now, what is the book value of the furniture over here? This 6,30,000 is supposed to be the book value. What is the book value of the furniture? 6,30,000. If its book value is 6,30,000, then what will be its actual value? Okay, how will we solve this equation over here? Against 90 book value, it is actual 100. So against 6,30,000, how much will be actual? 6,30,000 into 100 divided by 90. 6,30,000 into 100 divided by 90. 1 0 cancel. 9 into 7 is 63. So 70,000. Now, what is the actual value of the furniture? 70,000. 7 lakhs, in fact. 70,000 into 110 also, so 7 lakhs. Okay. Now, 7 lakhs is the actual value. and undervalued by 10%, book value 6,30,000. So difference of this 10,000 is our loss. Difference of this 10,000 is our, profit. Why profit? Because actual value is more. So now if we revalue the furniture and bring it back to actual value, because it is more, okay, because the furniture's value is more, furniture account we will debit with rupees 70,000 and it is our profit. Actual value is more, it is our profit. So because it is our profit, we will credit revaluation account with what amount? We will credit revaluation account with 70,000. So option B will be your correct answer. Furniture account debit to revaluation account 70,000. I hope everyone is clear with this. Actual value 7 lakhs, book value 6,30,000. Actual value is more. So we will be happy with that situation. It will be our profit. Profit means credit revaluation account. Furniture has a debit balance. Its value increases. So further you debit it with rupees 70,000. Now question number 108. P and Q are partners in a firm sharing profits and losses equally. So that is the old ratio, 1:1. They admitted R. This is the old ratio, okay? They admitted R into partnership firm on 1st April 2024. It was decided the value of goodwill, okay, to value the goodwill at 2 years purchase of super profits. So here, this thing has no relevance. Old ratio 1:1 will have no relevance, okay? Ignore it because we have to find the value of goodwill. They admitted R into partnership firm on 1st April 2024. It was decided that to value the goodwill at 2 years purchase of super profits. Super profits method is to be used here to find the goodwill. The capital of the firm of P and Q was rupees 5 lakhs. This we can say is capital employed. Okay, capital of the firm of P and Q is rupees 5 lakhs, means it is the capital employed. And the normal rate of return on capital employed was 10%. So how do you find the normal profits in super profits method? Capital employed into normal rate of return. Means what will be the normal profits of this firm? 5 lakhs into 10%, 50,000. Okay, what will be the normal profits? 5 lakh into 10%, 50,000. During the year ended 31st March 2024. Now the actual profits of the firm was rupees 2,10,000. Actual profits. The value of goodwill was. Now since we have to use super profits method, what is the formula by super profits method? Okay, first we find actual profits of the firm, average profits. We used to find average profits, but because this is chapter of admission of partner, we'll take the actual profits which are already given in the question. What are the actual profits already given to you? Actual profits already given to you are how much? 2,10,000. Okay, actual profits are 2,10,000. From that, if you subtract normal profits, then we obtain super profits. Now, how to find normal profits? Capital employed into normal rate of return. That is equal to, what are the capital employed over here? क्या हो रहा है? What is the capital employed over here? Capital employed over here is given to you as 5 lakhs and the normal rate of return is 10%. So what will be capital employed into 5 lakhs into 10%? 5 lakhs into 10%, that will be equal to 50,000. Means what are the super profits of the firm? Super profits are equal to 1,60,000. 2,10,000 minus 50,000, 1,60,000. Now, what is asked in the question? That goodwill is valued at 2 years purchase of super profits. So, if super profits are 1,60,000 into 2 years purchase, what will be the value of goodwill? 3,20,000. Okay, that means option D is your correct answer. 3,20,000. I hope everyone is clear with that. Okay. So 1 mark, very scoring questions of this kind. Now question 109. Precious Limited issued 40,000 10% debentures. How many debentures are issued? 40,000 10% debentures. Face value rupees 100 each at a premium of 5%. Okay. And redeemable again at a premium of 10%. Okay. Loss on issue of debentures account will be debited with. Now, loss on issue of debentures account, we always debit. You all remember Lloyd 2 pod, loss on issue of debentures account debit to premium on redemption. So loss on issue of debentures account, we always debit with the amount of premium on redemption of debentures. What is this? Pod premium on redemption of debentures. Loss on issue of debentures account, we always debit with premium on redemption of debentures. What is the amount of premium on redemption of debentures, everyone? What is the amount of premium on redemption of debentures, everyone? 10%. Okay, what is the amount of premium on redemption? 10%. How will you find that? 40,000. Now, hundreds, 10% premium will be 10 rupees. Hundreds, 10% premium will be 10 rupees. Here itself we can do it. 40,000 debentures into rupees 10 is the premium. So what will be the amount of loss? 4 lakhs. Okay, that will be option D. Once again, I repeat, loss on issue of debentures is asked. Loss on issue of debenture. What is the loss at the time of issue? The premium at the time of redemption. What is the premium at the time of redemption? 100 face values, 10%, 10 rupees. 40,000 debentures into 10 rupees. What is the premium on redemption? That is our loss, 4 lakhs. Question 110, option A and B, 2 are asked. Power Limited forfeited 1,000 equity shares of rupees 10 per share. Face value is 10 for non-payment of first call of rupees 2 per share. Non-payment of first call of rupees 2. 2 rupees is not paid. The final call of rupees 2 per share was yet to be made. This final call is yet to be made. Now, if I ask you if final call of 2 rupees is yet to be made, what is the called up capital by the company? I repeat, if final call of 2 rupees is yet to be made, what is the called up capital by the company? 10 minus 2, 8 rupees. The maximum discount, okay, maximum amount of discount at which these shares can be reissued will be. Now, what is the concept of maximum amount of discount? The maximum discount which we can offer at the time of reissue of forfeited shares. I repeat, the maximum discount which we can offer at the time of reissue of forfeited shares is the amount forfeited, amount paid by the old shareholder. I repeat, amount forfeited, amount paid by the old shareholder. Now, over here, what is the amount company has called? Company has called 10 minus 2, 8. What is called up by the company? Out of 10 rupees, 2 rupees per share was yet to be made, not called. 2 rupees is not called by the company. Means what is the company called up? 10 minus 2, 8. 2 rupees is not called by the company. So what has the company called up? 8 rupees. Okay. Now, out of called up 8 rupees, what is the amount not paid by the shareholder? 2 rupees. What is the amount not paid by the shareholder? 2 rupees. So if I ask you, what is the amount paid by the shareholder? that will be forfeited by the company. What is the amount paid by the shareholder that will be forfeited by the company? Rupees 6. 8 minus 2, rupees 6. Now over here, if you see how many shares, 1000 equity shares are forfeited. So what is the total amount of discount that can be given? 6 into 1000 shares. What is the total amount of discount that can be given? Rupees 6000. 6000 means what will be your correct answer? Option A. I hope everyone is clear with this. 8 minus 2, 6. 6 into 1000, 6000. Okay. Option B. The debentures which are payable on the expiry of specified period. Now see what is the question asked. The debentures which are payable on the expiry of a specified period, either in lump sum or in installments during the lifetime of the company, are known as which debentures? If we have to pay the money at the expiry of certain period, they will be called as redeemable debentures. Okay, option B will be the correct answer. What are convertible debentures? Those debentures which are not paid the money. Here it is given payable. They are converted into equity shares at the expiry of the period, either in full or in part. What are secured debentures? When the information is given that some assets are mortgaged, then they will be called secured debentures. Okay. And specific coupon rate debentures means they will be issued at a particular specific rate of interest, coupon rate. So that information, if given in the question, it will be called specific coupon rate. Here, because they are payable on the expiry of specified period, we'll call it as redeemable debentures. Going further, question 111A. Rima, Seema and Atul were partners in a firm sharing profits and losses in the ratio of 4:3:1. That is the old ratio. 4:3:1 is the old ratio. With effect from 1st April 2024, they decided to share profits and losses in the ratio of 3:1:4. What is this? This is the new ratio. Okay, 3:1:4. Due to change in the profit sharing ratio, Seema's gain or sacrifice will be. Now you have been asked either gain or sacrifice. Either you can use the formula of sacrifice ratio, old minus new, or you can use the formula of gain ratio, new minus old. If in sacrifice you get negative answer, it will be gain. If in gain you get negative answer, it will be sacrifice. Let us say, suppose we use the formula of sacrifice ratio, that is old ratio minus new ratio. Since we have to find it only for which partner? Seema. How will we do it for Seema? What is the old ratio of Seema? See here, Seema is the second partner. What is the old ratio of Seema? 4 plus 3, 7. 7 plus 1, 8. Old ratio of Seema is 3/8. Minus. What is the new ratio of second partner Seema here? 1 is 3:1:4. 1. 1/8. Since the denominator LCM is already 8, what will be 3 minus 1? 4/8. 3 minus 1, sorry, 2/8. 3 minus 1 will be equal to 2/8. Okay. Answer sacrifice is positive, so it is sacrifice only. 2/8 is already given to you. Okay. Instead of 2/8, 1/4 can also be given. You can reduce it further into 1/4. Check the option properly in the question. It may be 2/8 or 1/4. Anyone will be given to you. Okay. 11. Rohan, Piyush and Suman were partners in a firm sharing profits and losses in the ratio of 3:2:2. Again, what is this 3:2:2? Old ratio. Piyush retired. Second partner Piyush has retired. Okay. The new profit sharing ratio between Rohan and Suman, first and third partner Rohan and Suman, the new ratio is 4:3 after Piyush's retirement. The gaining ratio. Now, gaining ratio is specifically asked. At the time of retirement, we are concerned with gain ratio only. So, how do we find the gain ratio? New ratio minus old ratio. Let us do that for Rohan, Piyush and Suman. Rohan, Piyush, Suman. Okay. What is the old ratio of Rohan, Piyush and Suman? You can see here 3:2:2. Okay. 3:2:2 is to 2. Now 3 plus 2, 5 plus 2, 7. 3 by 7, 2 by 7, 2 by 7. Second partner Piyush has retired. What is the new ratio given between the two partners Rohan and Suman? 4:3. The new ratio is 4:3 between Rohan and Suman. 4 plus 3, 7. 4 by 7, 3 by 7. Now, since the final question has this gain ratio, how will we find the gain? Gain ratio will be equal to new ratio minus old ratio. Gain ratio will be equal to new ratio minus old. New 4 by 7 minus old 3 by 7. Denominator is already 7, so 4 minus 3, 1 by 7. And over here, new ratio 3 by 7 minus old ratio 2 by 7. Denominator is already same, so 3 minus 2, 1 by 7. Means what is the gain ratio 1 by 7 and 1 by 7? If you remove the denominator, what is the gain ratio 1 by 7 and 1 by 7? 1:1. 1:1 means option D is your correct answer. Okay, 1:1 will be the gain ratio. Question 112. Ranjit and Ranvijay started a partnership firm on 1st April 2023. New firm started on 1st April 2023. According to the partnership deed, interest on drawings, okay, it is interest on drawings based question, was charged at the rate of 10% per annum. Ranjit withdrew fixed amount at the end of each month. This formula we have studied. If equal amount is withdrawn at equal regular intervals, then what is the formula of interest on drawings? Annual drawings into rate of interest by 100 into average period divided by 12. That formula we will be using here. The total yearly interest on drawings was rupees 6,600. The amount of Ranjit's drawings, what they have asked you, Ranjit's drawings for the year ended, means annual drawings are asked. And in our formula, we use annual drawings only. So using that formula, whatever answer we will be getting will be of annual drawings itself. How much? Let's use that formula and solve this question. Okay. The formula is interest on drawings is equal to annual drawings into rate of interest divided by 100 into average period divided by 12. Okay, I repeat, interest on drawings equals to annual drawings into rate of interest by 100 into average period divided by 12. Now over here, all of you can see that interest on drawings is already given to you. This interest on drawings is given 6,600. So left side, interest on drawings will directly take 6,600. Annual drawings is what we have to find in the question. Annual drawings is what we have to find. Ranjit's drawings for the year ended 31st March. Annual drawing is what we have to find in the question. Into rate of interest 10. Okay, 10 by 100. Rate of interest will be 10 divided by 100. Now, how will we find this average period? What is the formula of average period? Period after first drawings plus period after last drawings divided by 2. Over here, he is withdrawing fixed amount at the end of each month. Means first drawings he is making end of each month, okay? First drawings he makes on 30th of April, end of first month. He withdraws the amount at the end of each month, means 30th April, 30th May, 31st May, 30th June, 31st July, and so on. What will be the date of last drawings? 31st March. Every month at the end, if he withdraws the money, first drawings he will make on 30th April, last drawings he will make on 31st March. How do we find the average period? Period after first drawings plus period after last drawings divided by 2. After 30th April, 11 months will be left out. After 30th April, 11 months will be left out. And after 31st March, 0 months will be left out. So what will be the average period? Equal to 11 plus 0 divided by 2, 5.5. So here average period we will take 5.5 divided by 12. Now how will you find this average drawings? Average drawings will be equal to 6,600. 100 on the other side will get multiplied. Same way 12 also on the other side will get multiplied. 10 on the other side, 5.5 on the other side will get divided. Now 1 0 cancel. 5.5 into 12 is 66. 1200 into 10, 12,000. 12,000 into 12, 1,44,000. Means what is this annual drawings amount? 1,44,000. Option B is the correct answer. Annual drawings will be equal to 1,44,000. Okay. Question 113. On the dissolution of the partnership firm of Gauri and Gaurav, building appeared in the books at rupees 21 lakhs. What is the value of building? 21 lakhs. 1/3 of the building was taken by Gaurav at 20% discount, and the remaining was sold at 10% profit. What is the main question asked? The value at which the building was taken over by Gaurav. Only that much is asked. Remaining which is sold, ignore it. Okay, remaining which is sold, that information we have to ignore it. This information is of no relevance. Ignore it. Because what is asked in the question? What is asked in the question is the value of the building which was taken over by Gaurav. So if we do that, 21 lakhs, 1/3 building is taken by Gaurav. So what is the building taken by Gaurav? 21 lakhs into 1 by 3. 7 lakhs of building is taken by Gaurav. 7 lakhs of building is taken by Gaurav. And how is it taken? At 20% discount. Discount means we'll minus it. Minus 20% discount. 7 lakhs into 20 by 100. 1,40,000. Okay, 7,000 into 20. 1,40,000 discount. So what is the value at which the building is taken by Gaurav? 5,60,000. 5,60,000 means which is your correct answer? Option C. In exams, you can do it directly. This is just, I have shown the calculation so that you understand it. Otherwise, 21 lakhs, 1/3. Okay, here it's given 1/3 is built of the building is taken by Gaurav. So that is 7 lakhs. Okay. 1/3. And then 7 lakhs, 20%, 1,40,000. If you minus, you'll directly get 5,60,000. 14th question, 114th question. Mathur, Jain and Varma were partners in a firm sharing profits and losses in the ratio of 3:2:1. So this is the ratio between the three partners, 3:2:1, 3 plus 2, 5 plus 1, 6. 3/6, 2/6, 1/6. Jain, second partner, was guaranteed that his share of profit will not be less than rupees 80,000. The question is on guarantee of profits. Second partner Jain is guaranteed a profit of 80,000. The firm's profit for the year ended 31st March 24 was rupees 1,80,000. The amount of deficiency borne by Varma. What is asked? Deficiency to be borne by Varma. First of all, second partner Jain. What is the ratio? 2. 2/6. 3 plus 2 plus 1. 2/6. So what will be the Jain's share of profit in 1,80,000? Jain's share of profit will be 1,80,000 into 2/6. That is 1,80,000 divided by 3, 60,000. Jain's share of profit comes to 60,000, but he is guaranteed what amount? 80,000. He is guaranteed 80,000. So what is the deficiency? If he is guaranteed 80,000, then there is a deficiency of 20,000. Okay, there is a deficiency in profits of 20,000. Now, If no information is given, how this deficiency will be borne by Mathur and Varma? This deficiency will be borne by Mathur and Varma in their ratio, which is 3:1. Between Mathur and Varma, what is the ratio? 3:1. Mathur, 3:1 means 3 plus 1, 4. Mathur will bear 3/4, Varma will bear 1/4. What is the question asked? Mathur or Varma? Varma. Question is asked about Varma. What is the deficiency? Varma has to bear 1/4. So if out of 20,000, Varma will bear 1/4, then what will be Varma's share in deficiency? 20,000 into 1/4, 5,000. Okay, what is the deficiency that Varma has to bear? 20,000 is 1/4, 5,000. The correct answer is 5,000. Is that clear to every one of you? Any doubts in this? Next. 15. 115. Parachita Limited invited applications for issuing 80,000 equity shares. How many applications are invited? 80,000. Of rupees 100 each at par. The amount was payable as under: application 30, allotment 20, first and final call balance 30 plus 20 is 50. So first and final call will be the remaining of 50 rupees. Applications were received for, how many applications are received? 2 lakhs. Over subscription. Allotment was made to all applicants on pro rata basis. Against 2 lakh shares, we have allotted 80,000 only on pro rata basis. The amount received at the time of allotment. What is the question asked? The amount received at the time of allotment. Now, how to solve this? Very first, we take number of applications received against that application money received then we take number of shares allotted against that application money due based on number of shares allotted. We will get application money due, remaining will be surplus. Now in this question, what are the number of applications received? 2 lakhs, and allotment will be done of 80,000 shares only. Okay, so applications received 2 lakhs, but we can allot only 80,000 shares which we invited. Okay, we can allot 80,000 shares only which we invited. How much of application money will be received? 30. So 2 lakhs multiplied by 30. Application money received is 60 lakhs. But if 80,000 shares are allotted, then same 80,000 into 30. What is the application money due? 24 lakhs. I repeat, 2 lakh into 30, 60 lakh is the money received. 80,000 into 30, what is due? 24 lakhs. What is the surplus amount? 60 lakhs minus 24 lakhs, 36 lakhs. This surplus we will adjust with allotment. Still, if surplus remains with call, because in the question no information is given that we have to adjust only till allotment. So the surplus we will adjust with allotment. Still, if surplus remains, we'll adjust with call. Still, if surplus remains, then we will refund. Now, because 80,000 shares are allotted, how much allotment money will become due? 20 rupees. So allotment money that will become due on 80,000 shares allotted will be, allotment money that will become due will be equal to 80,000 shares multiplied by 20 rupees. How much is allotment money? 20. Okay. So 80,000 into 20 will be equal to 16 lakhs. Now, because there is a huge surplus of 36 lakhs, entire surplus of 16 lakhs will get adjusted here. And further surplus remaining 20 lakhs will adjust with call money. So finally, do we have to receive any allotment money? No, we don't have to receive any allotment money because entire allotment money is already received with application. So further from the shareholders, no allotment money is going to be received. Still 20 lakhs of surplus will be left out, which will be adjusted with call money. Okay. Call money would be 80,000 into 50, 40 lakhs. So 20 lakhs will adjust and further 20 lakhs will receive. Anyway, what is the question asked? The amount received at the time of allotment will be nil because the surplus is sufficient. So no amount is going to be received at the time of allotment. 116. At the time of forfeiture of shares, share capital account will be debited with what? Share capital in forfeitures entry we always debit with called up capital. In forfeiture entry also we debit with called up capital. In reissue entry also we credited with called up capital. So option D will be the correct answer. Called up amount on forfeited shares. Okay. 17th question. $117. Divya and Saurabh are partners in a firm. On 1st October 2023, Saurabh advanced a loan of rupees 5 lakhs to the firm. There is no partnership deed. See, partner has given a loan, and if there is no partnership deed, then what did we study? We will be calculating interest at the rate of 6%. If there is no agreement done, no partnership deed is made, then interest will be given at the rate of 6%. Okay. On 31st March 2024, Saurabh was entitled to get the following amount as interest on loan. Quite simple. Which date he has given the loan? 1st October. So October to March. October to March. 6 months. October to March. October, November, December, January, February, March. How many months interest will be given? 6 months. What is the loan amount? 5 lakhs. So 5 lakhs into 6 by 100. Okay, this is a 6% interest and 6 months. So into 6 divided by 12. Further into 6 divided by 12. 2 zeros cancel. 6 into 2, 12. 2 into 3, 6. So 5,000 into 3, 15,000. How much of interest will be given? 15,000. Option C, 15,000 is the correct answer. Okay. Further, 118th question. Manav and Adi were partners in a firm sharing profits and losses in the ratio of 5:3. Roy was admitted. Now, old ratio between Manav is 5:3. Roy was admitted as a new partner with 1/5 share in the profits of the firm. At the time of Roy's admission, workmen's compensation reserve appeared in the balance sheet of the firm at rupees 4 lakhs. The claim on the account of workmen's compensation was 4,40,000. You all can see your claim is more than the reserve. What do we do when the claim is more than the reserve? Excess amount we debit to revaluation account. So what is the excess amount of claim over the reserve that will be debited? 40,000. This 40,000. And as I discussed right now, we will debit it to which account? Revaluation account. Figure is not asked only. What is the main question asked? Excess amount of claim over reserve will always be debited to which account? Revaluation account. The last question for today, question 119. Okay, there are two options in that. 119A. A, B, and C were partners in a firm sharing profits and losses in the ratio of 3:2:1. This is the old ratio. 3:2:1. On 1st April 2024, D was admitted as a new partner in the firm. D is the new partner. And the new ratio is 2:2:1:1. The sacrifice ratio of A. How do you find the sacrifice ratio? Old minus new. What is A's old ratio? 3/6. 3 plus 2, 5 plus 1, 6. 3/6. Okay. And what is A's new ratio? 2 plus 2, 4 plus 1, 5 plus 1, 6. 2/6. So this old minus new we have to do to find the sacrifice ratio. How will you find sacrifice ratio of A? Sacrifice ratio of A will be equal to old ratio minus new ratio. Old ratio is 3/6, new ratio is 2/6. So 3/6 minus 2/6. Since again the denominator is same, 3 minus 2, 1/6. So what will be the sacrifice share? 1/6. Optional question. Anya and Sanya were partners in a firm sharing profits and losses in the ratio of 5:2. Again, between Anya and Sanya, what is the old ratio? 5:2. They admitted Vanya as a new partner. Now, new partner is Vanya for 3/7 share in the profits of the firm. She acquired 2/7 share from Anya. This we have been doing in class earlier also. When the word from is given, it directly indicates the sacrifice for the partner. From means directly what is Anya's sacrifice? 2/7. And 1/7 share again from Sanya. From means directly what is Anya's sacrifice? 2/7. What is Sanya's sacrifice? 1/7. You are asked the new profit sharing ratio. Sacrifice is already given. So how will we find the new ratio? Old ratio minus sacrifice. Let's calculate it. Okay. Anya, Sanya, Vanya. What is the old ratio? You all can see 5:2. That is 5/7. 5 plus 2 is 7. 2/7. Vanya is admitted. Now, Vanya is admitted with what amount of share in the firm? 3/7, which will get 2/7 from Anya and 1/7 from Sanya. So, Vanya is admitted for 2/7 share. Vanya is admitted for 2/7 share. How that will be sacrificed? How that will be sacrificed? Once again, every one of you. 2/7 and 1/7. Okay. Anya will give 2/7 and Sanya will give 1/7. Okay, just a minute. 3/7 is the share of Vanya, not 2/7. Okay, it is 3/7. You all can see 2/7 plus 1/7, she'll get 3/7. Now you are asked the new ratio. So how do you find the new ratio? Old ratio minus sacrifice ratio. Means for Anya, 5/7 minus 2/7. For Sanya, 2/7 minus 1/7. And Vanya, we already have the new 3/7. Because again the denominator is same, 5 minus 2, 3/7. 2 minus 1, 1/7. This is already 3/7. What is the new ratio? 3:1:3. Okay, what is the new ratio? 3:1:3. Option C is your correct answer. 3:1:3. So we have done with all the MCQs of board exams today. Now in the next session tomorrow, same time 5:30 to 6:30, I'll be taking up with the further important MCQs. So we'll first try to take up with the MCQs of sample question paper and then the old question papers, as the study material which is shared with you contains the MCQs of all the past years board exams plus past year sample papers also. First we solve the recent one, then we go to the old ones. Okay. So go through this once again properly. We will be sharing the video with you immediately. Still, if you have any doubts or concerns, you can reach out to me. Bye everyone. Take care. Acha, Piyush ko doubt hai. What is it? Sir, in question 106B, premium will have no effect on interest, right? No, Piyush. Interest is always calculated on face value only. I repeat, every one of you note it down. Interest is always calculated on face value only. So the premium at which the shares are issued will have no effect on calculation of interest. Okay. See, similarly, if anyone else also has the doubts, you can put it on the chat box. I'll revert back at the end of the session. Bye everyone. Take care. एंड में खाली 14 ही दिख रहे थे, ऐसा था?
हाँ 14 में
और पूरे टाइम ऐसे
और 9 लोग लाइव थे।
अच्छा।
9 लोग लाइव में थे।